Hey everyone, welcome back to Corporate Decoder. Today, AIXCrypto Holdings Incorporated. Ticker AIXC just filed an 8K announcing a big money deal, and I am seeing some serious red flags that investors need to know about. Quick note, this is not financial advice, just my take on public filings for educational purposes. AIXCrypto is bringing in up to $50 million through a stock purchase agreement, but the terms suggest they are desperate for cash, and the price they might be selling shares for is concerning. Alright, let us dive into this 8K filing from AIXCrypto Holdings Incorporated. This is a current report, meaning something important and usually time sensitive has just happened. The company is AIXCrypto Holdings, and the filing states that on the 16th of June 2026, they entered into a common shares purchase agreement. They are selling shares to a company called Gold King Arthur Holding Limited. Now, the deal is for up to $50 million worth of AIXCrypto's common stock. However, there is a big catch. They are only allowed to sell up to 19.99% of their voting power. This is a common way for companies to raise money without needing immediate shareholder approval, but it also limits how much they can sell at once. The only way they can sell more than that limit is if they get shareholder approval, which they are planning to seek. So, AIXCrypto is essentially selling its common shares. These shares are being offered under an exemption from registration, meaning they are not going through the usual public offering process. This is often used for private placements like this one. The filing also mentions that these shares cannot be sold in the United States without registration or an exemption, which is pretty standard legal language for this type of deal. As for what they will do with the money, the filing says they will use the net proceeds for the purposes laid out in their prospectus. That is a bit vague, but generally companies use this kind of funding for operations, research, expansion, or to pay down debt. Now, here is where it gets really interesting and frankly a little concerning. The agreement has a mechanism called VWAP purchases. This means AIXCrypto can ask the buyer to purchase shares from time to time. The price they get for these shares is set at 93% of the lowest daily volume weighted average price over 3 trading days. This means they are guaranteed to sell their shares at a discount to the market price. Not just a small discount, but potentially a significant one depending on the market volatility. On top of that discount, the buyer, Gold King Arthur Holding Limited, gets a 3% draw fee. So if AIXCrypto sells $1 million worth of shares, the buyer takes 3% of that, which is $30,000, and AIXCrypto only gets 97%, which is $970,000. This means the net amount AIXCrypto receives is even lower than the discounted share price would suggest. To make matters even more financially painful, AIXCrypto already paid the buyer a $100,000 upfront fee, and this fee is non-refundable no matter what happens. As I mentioned, they need shareholder approval to sell more than that initial 19.99% limit. They have agreed to file a registration statement within 45 days and aim to have it become effective within 90 days after that. This process is for registering all the shares that could be sold under this agreement. They are pretty serious about getting this shareholder approval. They have to try to get it within 45 days of the deal closing, and if they do not get it, they have to keep trying every 45 days until they do. Once approved, they have to file some specific paperwork with the CC. The agreement also has an expiration. It will end 24 months after the registration statement becomes effective, or if the buyer has purchased all the shares, or if the company's shares are delisted from a stock exchange, or if the company declares bankruptcy or makes an assignment for the benefit of creditors. The company can also terminate the agreement with 10 days notice. There are also clauses that allow the buyer to terminate the agreement. These include if something called a fundamental transaction occurs, if the company materially breaches its agreements and does not fix it within 15 days, if the registration statement becomes ineffective for too long, if trading in the company's stock is suspended for more than 5 days, or other material breaches by the company. This part of the filing just confirms that the shares being issued are not registered with the SEC, which we already discussed. It is essentially saying that they are selling these shares privately, and the actual purchase agreement is filed as an exhibit, which provides all the detailed terms and conditions of this deal. The report is signed on the 17th of June 2026, right after the agreement was made. Now, let's wrap this up with my take. AIXCrypto Holdings Incorporated is raising a significant amount of money, up to $50 million. That sounds good on the surface, but the way they are doing it raises serious questions. They are selling shares at a discount to the market price, with an additional 3% transaction fee taken by the buyer, and they have already paid a hefty upfront fee. This structure is typically used by companies that are in a difficult financial situation and need capital quickly. The fact that the purchase price is tied to a volume-weighted average price with a specific discount for the buyer, and the buyer also takes a draw fee, suggests that the company might be willing to sell its stock at a price well below what its intrinsic value might suggest, just to get cash in hand. Historically, companies that rely heavily on these types of discounted equity financings often face ongoing struggles. For example, many micro-cap companies that frequently use these at-the-market or discounted private placements end up with significant dilution for existing shareholders, and sometimes, unfortunately, end up delisted. I am watching to see if the company can get shareholder approval to sell more shares if needed, and more importantly, what kind of discounts they will have to offer to raise the full $50 million. The risk I am watching is the potential for massive dilution to existing shareholders if they have to sell a lot of stock at these discounted rates to meet their financial needs. My biggest concern is that this deal signifies a potential cash crunch for AIxCrypto holdings, and they are opting for a costly way to get that cash, which could hurt the stock price in the short to medium term. What I'm actually looking for is a clear path to profitability or significant operational improvements that justify this kind of financing. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description.